Start there if we can begin at that just by looking at the overall market sentiment. I mean, we're seeing 48% of that market turnover is dominated by foreigners, and yet the market was up 0.2%. And we do know that foreigners worldwide have been selling, but apparently not in Kenya.
I think that's a very interesting point, and I think 2010 is going to mark a serious divergence where I think foreign interest in African and frontier markets remains well below the average that it should be at, which is about 2% or 2.5%. So I think we're in a sweet spot in these very frontier markets as foreign investors look to up their allocation to a neutral level. And I think you're seeing that play out in places like Nigeria, Kenya, Ghana. Of course, South Africa is a little bit different because foreign investors tend to sell it as a knee-jerk sell the moment it gets volatile in the international markets. But I think there's a safe haven and a safe port in the likes of these frontier markets, as you're saying.
Which is very interesting indeed, because at the World Economic Forum in Tanzania, where we were last week, we had a conversation with the African Development Bank President Donald Kaberuka, and one of the things that he mentioned was the stability in financial markets in Africa. And he mentioned the fact that Africa has actually withstood 3 crises in the past year or so. We had the food crisis, then we had the oil shock, and then the financial crisis. And in spite of that, African markets are standing, and foreign investors do appear to be taking note.
They need to take note because it's been an extraordinary performance. We've had everything thrown at it. As you said, 3 body blows, and we've come back bouncing off the ropes like Muhammad Ali did in Kinshasa all those years ago. And I think as a foreign investor under-allocated to this space, this is the last convergence trade in the 21st century. As Africa converges with the 21st century, I believe the phone was the catalyst for this convergence. And I think it's a one-off transaction that you're getting involved in, and you need to be on it.
So maybe we need to begin changing the lexicon now that we use around the flight to quality, because flight to quality seems to be suggesting that foreigners are coming into African markets. But what are they buying, Aly-Khan?
Well, I think typically they tend to go for the big capitalization stocks in Kenya, Safaricom, East African breweries, Mumia Sugar. Most of the foreign investors have limits. They can only invest in a company which is capitalized at a certain amount, which has an average turnover. So they tend to reach for the big stocks. And I think that's what you see on a day-to-day basis. The banks are very attractive to foreign investors at the moment. Safaricom is caught in the crosshairs of the regulator for now, but it will, I'm sure, perform extremely strongly at its full year results. And then the foreigners are reaching for things like breweries, BBC, brewers, bankers and cement. That was the old story in the 90s. I don't think it's changed that much except for mobile telephony.
Let's go to some specific news. We saw on Friday Kenya Commercial Bank, now I have it here as the largest bank in East Africa by assets. Now they received shareholder approval for a 15 billion shilling rights issue, and they want to try to use that money, of course, to increase their share capital from 2.4 to 3.5, which enables them, of course, to borrow. If you were a shareholder, would you be following your rights?
Yeah, it's an interesting question. I think there's more juice to be had in other places in the banking niche of the Nairobi Stock Exchange. Equity Bank inflected earnings over 40% in the first quarter. NIC, same story. So I think there are more high beta places to be, where as an investor you can get higher returns. I think KCB is a medium-term transaction. If you're investing in it, it's on a P of 12, which is not unreasonable, but it's been capped by 24 on the charts for a very long time. I would buy it on the break of 24.
Also on Friday, we saw a report coming out of the World Bank suggesting that Kenya's economy is going to grow at least 4%. That's in 2011. Is that a forecast that you think is reasonable, given what you're seeing on the ground and in terms of also the performance of the companies that you've been seeing?
I think they said 4% this year, 5% next year.
Right.
I think there's a lot of volatility around that because we've got a bit of politics in the way at the moment. If we get a referendum that goes yes, I think definitely we might test the upside of those predictions. We might hit 4.5 this year, and we might hit 5.5, 6 next year. But clearly all bets are off if the politics goes pear-shaped. I don't think it will. I think we're in an interesting scenario politically where we're getting a lot more process and clarity via the ICC. I think the referendum will be a yes vote, and I think we'll have increased optimism this year in Kenya.